Where is it? Where is it? Hello? Where is the live? Where is it? There she is. Copy. All right. Doink. Doink. Bing, bing, bing. And then live. Doink. Doink. All right. What's up, gang? Talk about a wild day on PA, huh? Live. Live. All right. All right. Okay. Let's get it rolling. Did you guys take any trades today? Bro. Yes, no, maybe so. Paper today? Gotcha. I need a Zenchino. What? I'm going to replay price before news, so that this is what we got going on just on the charts fresh. That is all I'm going to look at. And then I'll label off the previous daily low, because this was the daily bullish fair value gap. And that corresponding low is here. And Dow's corresponding low is all the way down here. All the way down here. Boom. Just like that. All right, let's talk. So, before I get into any thought process of what I think tomorrow will bring, let's talk about today and go over everything pre-news, after equities open, after 10 o'clock, all that sort of stuff. Because I did take a trade today, but I managed to cut it early, and I'll explain why I did. Oh, shit. I forgot that I'm still, like, in the middle of the screen. Thank you for reminding me. Thank you for reminding me. Okay. So, this was priced at 7 o'clock, pre-news at 8:30. Now, we had a daily bullish fair value gap resting below here. So this was idealistically where we wanted to see price trade down into to start or to create that initial manipulation. So if I'm going to go down to our lower time frame and like look just to see, what was price doing pre-news? It was just a buildup of liquidity. All of this was low resistance liquidity to then end up taking out for news to provide that manipulation into a daily key level. Now, if we look and see how price reacted and what was happening pre-news, we had a Asia untapped or untaken out high on the NASDAQ, and we ended up taking that out. Where is news? News is here at 8:30 right there. Boom. So here's right before. And then we actually set in an SMT at these hourly highs pre-news, like this. Just like that. The Dow Jones making lower highs while the NASDAQ was making higher highs, as you can see here. So that was an SMT in itself, and as well as the S&P 500 creating an SMT like this at that corresponding high from 4 o'clock. Yeah, 4 o'clock, just like this. So this is what delivered us lower into that daily bullish fair value gap. Just like that. One singular bomb lower. Now, if 8:30 comes in, yo, I'm literally putting you're going in timeout, buddy. Where are my mods? And you're going in timeout, honestly, for 30 minutes. So like that you need to get your brain checked to think that I'm going to answer a question when you say it like 17 times. Idiot. Anyways, back onto discussion and the focus. Yeah, like I don't know what goes through some of your guys' heads if you think that I'm going to answer you when you spam questions. Like you're delusional. Anyways, at this time, I'm basically waiting to see what can price offer us next. I don't traditionally like when news is one singular down close candle, because this is what it was. It was one big 5-minute down close candle on all three. So this was the closure, like here. Now let's go to 9:30 as to see what was happening at this point, because I'm anticipating 8:30 to be a manipulation, and then I want 9:30 to continue higher. Now, the thing is with me is I would have been more than happy to execute down here. Like I would have had no problem to do that, because here, let me go relatively close to 9:30, which was 9:30 is here, right? Let me skip one more, right there. So this is right before 9:30, and actually let me skip right here. Boom, this is important. Okay. Now, at this time, what do we already notice here? Hourly chart between the three. I knew and had a strong understanding that this would have been manipulation. Why? Because we had a big SMT set in on the daily from the Dow Jones failing to take out the previous daily low, while the S&P 500 and the NASDAQ both took out that previous daily low inside of a daily bullish fair value gap. So this was the first stage of SMT that I saw here. Now, I didn't want to jump the gun to automatically think that this was a manipulation. I kind of wanted to see how this hourly candle closed, and then I would go from there to see if I can get in on a new 4-hour candle open low high close to then catch that wick to then end up trading higher and then take out that data high. So if I go to back to the 5-minute, this is this daily SMT set into place here. Now 9:30 comes in, and then we look at the previous hourly candle lows here between the Dow Jones, the S&P 500, and the NASDAQ. We have an SMT set in with the Dow making a lower low, just like this. Go to the 5-minute chart. This is that SMT set in. Boom. Like that. But I don't have anything significant. Like I don't have a down close candle that runs a short-term low that I could then execute on. I don't have like an order block that I usually would reference. I don't even have a breaker or an inverse fair value gap. If you guys watched my 3 ways of execution, either the breaker block, the inverse fair value gap, or the order block, none of that really gave me an opportunity on my execution timeframes. So I just had to wait, unfortunately. And we play out price a little bit more. We have our 2-stage SMT set into place, just like this. So I'm automatically thinking New York AM or 9:30 open, we're going to continue higher. Where are we probably going to take out? We're going to take out the 8:30 data high. So I wait. I'm just like kind of chilling in, seeing maybe if this time or before 10 o'clock, we kind of consolidate, accumulate price. Maybe we create like a swing low. We take out that swing low, and then price can then give me an area to like hop into a trade. But if I'm like looking at this even more, we are just chilling and consolidating in price. There's nothing really that I could do here, unfortunately. And then we get to that 10 o'clock time. 10 o'clock time, we drop lower, like ever so slightly on 3 candles. I would have done something if price came down. Like this would have been like my most ideal way of getting in. If price came down on like either the S&P 500 or the NASDAQ and we cleaned out a short-term low like this. Like one of them cleaned a short-term low and then got a change in save delivery, a breaker, inverse fair value gap, order block, boom, I get in, and then I target the 830 high or something above here to get a 1 to 2 risk to reward. That would have been like my ideal play on. But I didn't get that, unfortunately. Price ended up kind of hanging around, and then it just took out those data highs eventually, just like this. And same thing with like the S&P 500, nothing here. And even the Dow Jones, I don't see it either here. Like I was really like stalking this heavily, and I wanted to get in. I just didn't have my entry function to get in. I understand if you guys did take longs once we set in that 2-stage here from these down close candles, I would have understood this if you labeled this as like an order block. Well, not an order block to you is different to my high probability order block. I like the ones that clear liquidity, then we close above them. That's my label on. That's my stamp. Everybody knows me for that. So I would have understood if you took this and then you put your stop loss at the 2-stage SMT low. That would have made sense. And then targeting the data high 830. So at this point, once I saw price expanding, clearing above, closing with displacement above those highs, I was watching the 15-minute chart, and I was like, okay, now we are expanding, like kind of also inversing this 15-minute gap here. Now we have a down close candle here that clears resting liquidity. And then maybe I can catch a continuation long. And then I look at the 15-minute charts compared to all three. And at this time, when I look to place my stop losses, I'll go over the plan for tomorrow, but just focus on price right now. When I go over stop loss placements, this is very important. I want to have my stop loss placed at a point in price where there's SMT set at. Now, down here, when I said like you could have bought down here, if you utilize those order blocks or those opposing candles to support price with a stop loss relative to the SMT set in low, I didn't have anything relevant in this entire up move that I could even got in for me to label where I could put my stop loss at. The only thing that kind of gave me some sort of inclination to take a long was the fact that these previous 15-minute candles here, this was a higher low on the S&P 500 and the NASDAQ, while the Dow Jones here was a lower low inside of this range here. So what I wanted to do was long this down close candle here and then just look to trade the continuation of anticipating the new 4-hour candle to be an open, low, high close. So when I was watching price and I got in here at this order block tag, the next 15-minute candle right here, we closed below the fair value gap right here, inversing it, and I closed my position. So I legitimately got in here. I have my stop loss at the SMT set in low. I just wanted to target a 1 to 2 risk to reward just like this. And I got out right there when we closed. So I took a small loss, but thank God that I closed there because price ended up digging deeper, just trading back and forth within the range. And the reason why this kind of was just acting lethargic and didn't really do much was because we now had another SMT set in at the highs with the Dow Jones. So like we created an SMT here while the Dow Jones was all the way down here. So I didn't take a big hit on this because I wanted to manage it properly, and I just wanted to also see if bullish PD rays were going to be respected in regards to the price move. So I was completely fine with closing this and walking away. That's unfortunate. Like, it's just the way it is sometimes with price, and there's no way, like you talking about like that high probability order block here, there's no way that I would have went in here with my stop loss all the way down, like all the way down here. I wanted to refine this a little bit more to where my stop loss was covering like 50% of the candle, but also like I could place it where there was an SMT set into place. So that was where I was completely fine with doing that. But my vision in regards to what happened to news, what to do after news, and where was price gravitating towards was accurate. But the way of how price was moving didn't match the signatures that I needed in order to get in on the time frames that I watch. And I would have loved to get into a position down here. I just didn't have the best conviction besides seeing the two-staged SMT set in at the low. I would have loved to pick up something down here, and I just didn't get that. It was more so just a consolidation to then price expanding, and I couldn't get in. Did any of you guys take anything long, at least, down in this zone of price on the S&P 500 or the NASDAQ? So you guys did? If there was a inverse fair value gap or a breaker or a order block, I would have been in down there, and I would have simply just targeted a 30 high. But still, the functionality behind price delivery and watching us, like I said this in my other videos before, talking about like copying my entry model timing. We have 8:30 news. 8:30 news comes in and does what? Manipulates into a key level, higher time frame, daily fair value gap. What does 9:30 do? 9:30 then distributes and treats the 8:30 news as a manipulation due to swing. 9:30 continues, takes out that data high. That's what we do. That's how we operate and how we read high impact news. So the bias and the understanding as to where price is most likely to go to was correct. The entry function on my behalf was not there. And you can't really get mad at that. You just need to know that you're reading price correctly. It's just either you have to switch around your way of execution, or you just let it move on to the next day. But this wasn't even a big hit at all. It was a properly managed trade. Literally just got out the second that we inversed the gap, and I saved myself. So I was more than happy as to how I managed and treated price today. Now, moving into tomorrow, and I hope that you guys have watched the weekly outlook that we did together, because everything has been playing out to the T, I'm not going to lie. Like, everything has been pretty beautiful. But, like, also, I'm not even too mad about how price has delivered today. Why am I not too mad? Because look at the result of what's going on after. The result of this whole day has been a consolidated set of dog shit. And I don't feel any sort of FOMO, neither should any of you, in regards to watching this play out. You know? Like, you shouldn't care about watching an hourly barcode move and just trade like this. Once tomorrow comes into play, we have a 8:30 driver, we have a 10 o'clock driver, and what could potentially happen is price creates another set of SMT running today's low, maybe on the NASDAQ, while the S&P 500 fails, and then the Dow Jones also fails to do so, and price ends up running higher. Like, that could also be a case scenario. But we already on the Dow took out that previous daily high just now. So with price being in the consolidation hold on one second. With price being in this consolidation, I can't really give you anything of high probability other than wanting to see if news can come in again tomorrow, potentially sweeping out the daily low that was set in today. We have a 4-hour new candle here from 2 o'clock. That's a flat body low. If we end up sweeping this out, then we can go from this low to then this high here. I think that, at least for now, believe that the CPI low was set in with that SMT set in between NQ and the S&P 500 here. Just like that. And same thing with the Dow down here. While the NASDAQ made that higher low, just like this. So just looking at this as the first initial read for me to even give anything, I would have to say that price on NQ would be gravitating towards the low set in from 6. But that can change. That can change. That can change. Did anybody have like a complete shit day where they went outside of their rules, they overtraded, they felt like they were completely lost, and watched price ping pong back and forth? That's fire, Tyler. At least I feel like a heavy majority of you that watch or join these lives, a big chunk of you don't have problems with the over trading, the knowing high probability versus low probability price conditions, and can determine when to stay in and when to stay out. I feel like that is progress. And this is the last time that I'm going to do this. These are my chart colors, so screenshot it while you can now. Boom. This green, 50%. This black, all the way to the right, 69%. There you go. There you go. There you go. Yeah, sure. Let's go over Tuesday. Let's go over Tuesday's CPI. So, let's replay price here. Let's go here. And go to the hourly like that. Okay. So, CPI was a long that we took. We actually took a win and then a loss on Tuesday. And it was wild. The loss was funny. I am not going to lie. The loss was funny. So CPI data release, we had an SMT set in at the 7 o'clock candle lows, just like this, as you can see. The lower lows set in on the NASDAQ, or lower low set in on the S&P 500 and the Dow Jones. Now, the 5-minute chart was when shit got sticky. Let's replay this even more. because I tweeted out, I even said like, yo, who got bent on that 1 minute candle from the NASDAQ at like, what was this, 940? Like, this is the data release. We pumped higher from the bullish breaker, inverse fair value gap, order block, all that sort of stuff. CPI longs was honestly like super, super, super obvious. Now, what I was watching in price delivery here, so I'm going to keep on skipping price, blah, blah, blah. Here is when I was looking to long for the first initial position. Now, this time, what I wanted to do was watch to see like what was going on in this retracement here. Like, is price going to flip? Oh, shit. Damn it. Didn't mean that. Here. There we go. That's better. So what I was watching at the 9:30 bell was price to just continue in the correct direction, drawing, just continuing in CPI's bullish momentum move. So I wanted to see price inverse this 5 minute gap here, and then I would have longed it. Now, 5 minute candle comes in at 9:30 open, pumps. Does what? We create a little SMT divergence set in here. So I was like, cool, I could take this. This looks good. So I end up looking to long the retag of this M5 inversion gap right here. I put like my stop loss like relative like to like the candle low, just kind of covering almost the SMT. So I had a target of 1 to 2 risk to reward, just like this. I bought this next 5 minute candle. We had a good displacement here. So I was like, cool, sweet. Next 5 minute candle annihilates me. But why does it annihilate me? Because Trump comes out of nowhere from left field and says he's going to sue Jerome Powell. So, like, what the fuck? So we didn't even take out any highs here. And I'm not even going to lie, I laughed at this. Like, I thought this was funny. Like, I'm not even kidding. Like, the fact that I just get bent from Jerome Powell and Trump getting into a feud, like, what am I going to do? Is it really going to matter? No. Like, I go to the 1 minute chart, and this was the candle of death that just came out and us all. So, yeah, that shit happens. I thought it was great. We had a great 5 minute candle close, but then Trump had to come in. Orange man had to completely dick down everybody. And yeah, that's shit happens. What are you going to do? But anyways, that wasn't going to stop me from taking another trade. And what I did was I pretty much just waited for more I waited for more confirmation because, one, we didn't have any SMT set in at the highs. So I was like, bet, I'm still going to look to long. I had ammo. I could take 2 trades in a day and be fine. Now, what I did here was, hold on, what is going on here? What I did here was just wait. Next 5 minute candle sweeps out lower. This 5 minute candle sweeps out a short-term low here. And then I am pretty much just waiting for the model to present itself. Now, NQ comes lower, digs. We are now creating some more relevant SMT. And then we get finally a bottom. And then if you look on this hourly chart here, the Dow Jones fails to tag the hourly gap while the S&P 500 and the NASDAQ both tag it. Just like this. Like, I'm surprised that we even created an hourly gap here, but we ended up being saved. Created another SMT just like this. Go to the 5 minute chart. And this is what we're kind of working with. Now, I play out price even more. Wait for my time to shine. And boom. This was when I was looking to get into another trade. when the NASDAQ provided our execution and the forever model indicator was presenting itself. So I wanted to get in from this down close candle that ran the short-term low, and we closed above it, which also at the same time, simultaneously, this was a creation of a 15-minute bullish fair value gap. So I got to here, I'll skip through a little bit here. When we get that tag, not there yet. I think it's here. Bang. Right here, we have 15-minute on the S&P 500 failing to create that SMT, while the NASDAQ, we actually do it here. Hold on, I need to flip this to bullish. Boom, boom. So we create an SMT divergence inside of a 15-minute gap like this that aligned exactly with our order block. So it was just extra stacked confluence for us to then even take that long. And we got the tag, look to long here, yada, yada, yada. Put your stop loss there. Target 1 to 2 risk to reward. Just like this. And then price ends up running and cleaning all of those highs like that. So that was clean to see and made back for the loss and more on that day, which was fire. It was fire. Thank God. But, what up, Tristo? How we doing, Brody? First long, I wanted to miss you. Oh, you missed the second long? That's fine. After one wave crashes, there's always another one that forms. Don't sweat too much. Yeah, I'll check Bitcoin after, but Bitcoin actually cleaned out that 4-hour execution from the longs here. Like this finally met its draw, which was stupid clean. Actually, I need to delete this and re-add it because the indicator plotted this one too. This was fire. We had the initial 4-hour order block here that ended up getting closed off on that run, but the weekly SMT was still set into place. But then we had the order block execution here from the indicator, order block execution here, and then price ended up cleaning a 1-to-1, 1-to-3, and then cleaned all-time highs. And then after that, literally just got bopped. So still played out. We reached the objective point, so you would have been fully closed there. If you did just come in to the live, just rewind it a little bit, and you'll see exactly what I took this morning and how I managed it. But so far, like with how price is moving and how we're kind of delivering, I am not too sure what this wants to do besides potentially gravitating towards this low. The Dow Jones is absolutely on fire mode right now. I want to just continue its trend moving and eventually ripping through the high from 45,316, and that's a weekly external high, and then all of these highs too as well. This swing high and then all-time highs. Like Dow still needs to go here, in my opinion. This whole thing here is just a market maker buy model that has yet to be completed. Smart money reversal, accumulation, reaccumulation, and then eventually we'll reach out all these. So that's my view. That's my standpoint right now. That is my standpoint. Yeah, just rewind and you'll see the trades that I took Tuesday and then today, the one trade that I took today. But how to get rid of the break-even phase, it's also dependent on how long have you been trading. how long have you been trading, and questions that you could potentially ask yourself is my risk consistent? Are my wins covering my losses? That's a big thing. I know I've noticed that with a lot of break-even traders, that their wins that they take do not cover their losses. They pretty much cover the same amount as their losses, which is a big reason as to why you're not actually making exponential progress. So you got to make sure that, one, you're journaling all your trades, you're knowing how much you're risking per trade, and how many trades are you taking within a day. Like for me, and what I tell all my students is like, I always keep myself at a limit of like 2 losses in a day. Like Tuesday, I took 1 loss, but I was able to come in again confidently because that news release just came in, fucked me. And then I went in again with more ammo, with properly managed risk, and I took another trade that ended up covering my loss and a little bit more. I got the loss on the first Bitcoin long attempt that I put out publicly, and then I had the second entry on the Bitcoin long down here that I also put out. So again, if you take 1 loss from one PD array or 1 key level execution, just wait for price to offer another entry. Doesn't mean that the whole trade idea is invalid. Just means that maybe price wanted to come down lower, dig deeper into the key level, take another execution, and then go in again. It's fine. Just don't be so discouraged if you lose the first attempt. Just wait for another one. It's fine. And also, cut losses early. That's a good point that Cookie just made there. If you're at a break-even stage, I would honestly I would avoid going break-even on your trades, if I'm being completely honest with you. Avoid break-evens, only accept wins or loss, and only focus on. I'm biased because I live in New York. We're right outside of New York. Only trade New York session or New York AM session, and stick to one market. Like, just trade NQ, ES, Dow. Like, don't be monitoring all markets like metals, commodities, foreign exchange, and indices. Your head will kind of be all over the place. So I would say stick to one session, stick to break even, or stick to a losing trade or a win, and focus on your risk that you're putting on per trade and making sure that your wins cover your losses. Bum, bum, ba, ba, ba. Now, let's see. Let's do a giveaway. Let's do an indicator giveaway because I showed bombs on it. I'm not gonna lie. That just made me think about that. Let's do a giveaway for the Forever Model indicator because this was basically what I was covering from the trade from Tuesday and then this Bitcoin trade. I'll do it after I answer these questions. What is the most used time frame alignment? So I pretty much will always stay on the fact of daily 1 hour, but also pairing it with the 4 hour, weekly 4 hour M15. But that is more consistent with if you're doing swing trading. But if I'm looking to take trades intraday, I'm pairing together the daily candle with the 4 hour candle the 4 hour candles and the hourly. And then getting that daily profile set into place, I will take my executions on the M5 99% of the time or the M15. I don't really go too low, like below the M5. I know people do like M30 to M3. Um, that's pretty common, but I just the lowest that I go personally is the 5 minute. That's just how I've always done it. Sometimes I feel like I want to quit, drain my brain. What should I do? If you feel so like drained and like mentally exhausted, the best thing that you should honestly do is take a break. Like take taking a break from trading doesn't do anything besides help you. Especially if you feel exhausted mentally and you feel like you're not really like getting are you fucking kidding me? Dude, this is actually ridiculous. All right, whatever that was. Um, yeah, like if you feel mentally drained or exhausted in your journey of trading, take a step back. Take a mental reset, take a week off or however long you need and come back with a fresh level head and then come back in again and keep repeating the same process that you were doing. And also understand this time of year, like August, historically speaking, is one of the worst months in regards to price action. Like it truly is. And it also doesn't help the fact that we have Orange Man in office that realistically can say anything and everything at any time of the day, especially during market hours. So we're in a different time in regards to how price is delivered in the market, and a lot of indecisiveness and unexpected moves can happen. You just can't let that shit get to your head. So if you're feeling like you're lost or if you're feeling drained mentally, take a step back, take a week off, 2 weeks, or maybe take off until August finishes, and then you'll be okay. But if you have something that's working for you, if you have like a working strategy that you like we're making money on, or at least we're making money on in the past, just because you go through a dry streak doesn't mean that you need to change your entire entry model mechanics. Maybe it's just not the time of year that you are in the ability to pull money out of the market. Like, I thrive when price is trending, and I don't thrive when price is in higher time frame consolidation or we're slow moving. Like all of my trades, the best trades that I have are always derived from key levels, aka fair value gaps, or from old highs and lows. Outside of that, I don't pay any attention to what price does in between. Like perfect example, I don't pay any attention to like gold. Gold has not been on my watch list or my criteria in I don't even know how long. This shit has been absolutely AIDS. And people can say otherwise. I will say you're an idiot. I don't want to trade something that has been straight up monthly barcoding for so long, for like literally months on end, practically since the start of Q2. So I'm good off of this until this starts giving me displacement, at least on a weekly time frame, creating some sort of clear weekly gap that I could then target something. So I know my conditions, I know what I thrive on, and I know what works and what doesn't. And you need to figure that out yourself too. But let's go and do the giveaway for let's do like a month access of the indicator. All right. How am I going to do this? Let's say the first person to type, get your fingers ready, and it has to be spelled correctly. The first person to type Sydney Sweeney gets the access. All right, think Drex got it. Drex, open a ticket in the Discord or in my Discord, and I'll give you the code. Sydney Sweaty. wait. Yeah, you spelled it right. Okay, cool. All right. Let's screenshot this. All right. Let me send this here. Fuck. I need to send this to myself. Cool. Yeah, open up a ticket in my Discord, and I got you. Oh my god. But be patient tomorrow, and let's hopefully get something that clears all of this out. I want to see news give us some clarity. We have 8:30 high impact news. Focus on that. That's going to be your prime focus for the day. Hopefully that can clean out this, maybe create some sort of SMT, and then we go from there, targeting back up into the range. So that was my recap on price today. That was my trade that I took Tuesday. That was the trade that I took today. And hopefully we can clear this shit out, and tomorrow will go well. So I hope you guys all have a great rest of your day. If you want another weekly outlook, also I forgot to mention, I already posted this on my YouTube community tab. Apex extended their 80% off deal until the 27th of August. So 50K accounts I think they're only like $37. So if you don't already have 20 Apex PAs, pick those up. Code Sniper. But if you want another weekly outlook, like the last weekly outlook we did, it went really well, and I'll do the same thing on the next Monday with all of you guys, because I'm happy to see that you guys are reading price the same way that I am. And the more that we do it, the better you guys will get, and hopefully kick you guys out of that break-even stage and get you out of the slump that you've been in. But take care, everybody. Good luck, good trading tomorrow, and I will talk to you guys all later on. Have a great rest of your night, everyone. Deuces.